The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks. Welcome back here to the Diagnostic Trading Hour with your host right here, Darrell Martin at TFNN. Don't forget you can listen to us anywhere on your mobile phone at tfnn.mobi. Let's check out where the markets are at right now. We got the S&P down a whole point and a half. We have the NASDAQ down a half a point, and the Russell down just a couple. The Dow currently is up 3 points, so getting some oscillation. A little bit of trends in there you can take advantage of, but a lot of oscillation going on. Looking on over at gold, it's up just a mere $1. We got silver pretty flat on the day as well, along with copper and oil up only 19-20 cents at the moment. Looking over at natural gas, we got it down 1%, so natural gas moving like usual. You usually get a lot of good implied volatility and a good amount of volatility itself inside the natural gas contracts. We got corn right now is up 2.75, and we have soybeans down 9.25. Euro dollar is currently up 28 pips, pound dollar up 6, Aussie dollar up 47 pips. Euro yen is up 52 with US yen up 18 and pound yen up 39. Dollar CAD is currently up 46 pips, and dollar franc is currently down 18 pips on the day. So that catches you up on where the market is right now. And let's go ahead and talk a little bit about your trading opportunities in the market. So as far as the news, last night we did have the Aussie dollar monetary minutes come out, and that was a pretty flat trade, a great butterfly trade. So usually it doesn't move that much. And then also looking on over and checking out just some of the other possibilities tonight, what's going to be happening. We got the Fed chairman, Mr. Bernanke, for now anyway, the chairman, is going to be talking at 7 o'clock tonight, having a little, speech. So not a major press conference, should not be a major market mover, but you never know what might come out of his mouth. And that could cause some good nighttime volatility on gold and stuff like that, depending upon what he says. So always keep your eye out for that. Could affect the currency markets and maybe even a slight impact on the indices. Again, that's tonight at 7 o'clock. The big news day of the week, really the only real news day of the week, is tomorrow. So tomorrow we have a lot of things we can be looking at, and I wanted to walk through that. I know I went over it a little bit yesterday, but I want to go through it in a little more detail today and focus a little bit more for you on how to put together this plan of just like how to take basically the most advantage of all the news reports coming out tomorrow. So what do we have on the roster? Well, first thing in the morning, we're going to have the pound dollar come out, and it's going to have its meeting minutes, not really the meeting minutes, but the purchase facility, the bank rate votes. So all that stuff comes out at 4:30, and usually we get some decent volatility on that one. We're going to come back to that here, in a little bit later in the show, but first I wanted to spend most of the time focusing on the big event, which is going to be the FOMC. And we're going to talk about first how to straddle or strangle this, because we expect a lot of volatility on when anytime minutes come out. So of the Fed funds, so the FOMC interest rate announcement, statement, all that stuff released at 2 o'clock. Okay, so again at 2 o'clock tomorrow, we're not going to have the interest rate and everything else, but we are going to have the minutes coming out, and let's see how we can take advantage of that, because there's a way to trade this on Nadex that I found has been very effective. And there's really two ways to trade it. There's the before the meeting minutes and after the meeting minutes. And if you're new here, you don't have a Nadex account, hop on over on TFNN.com, and over there on the right side, you're going to see a banner that says Nadex. So right there. So click on that Nadex banner. And then demo trade this tomorrow. Have some fun with it, okay? Go up to trading, go to demo trading account. And on demo trading account, put in your username, first name, last name, phone number, and email address. And it takes about 15 seconds, and then you're going to get an email that is going to show you, different ways to take advantage of the market, because you'll be able to trade binaries and spreads. And this one's, it's pretty interesting. You can go in, like I said, you can straddle, you can strangle it. because those minutes can have a pretty big impact. And a lot of times I'm looking for, as much as a 70-pip move when these come out. So once you get that demo account set up, then you'll want to go over and check out the scanner available over here. So I got the diagnostic box spread analyzer. You also have the binary scanner, the deviation levels, all that included together. And log in so that way you can hop on there and make it really easy. Basically, it's a way to make a better way to trade, being Nadex, easier to trade. And it literally does all the math for you. It feeds all the data in, and it parses it out, so that way then you're able to easily go in and find the best contract, because there may be literally over 1,000 contracts available at any given day on Nadex, so it can be sort of intimidating to try to figure out how to take advantage of it. So looking at this, what we're going to want to do is hop on over and look at the before and after the news announcements. So go over to binary scanner, and then just put in a simple thing, 65 to 95, and hop in about 2 hours before. Okay, this is going to be what we call butterflies, range-bound trading on Nadex. And I'm going to start as early as 90 minutes before the meeting minutes come out on the trades. And what I'll do is I'll go in and I'll look at all the different, majorly the dollar-based currency pairs. Okay, so we're looking at Aussie dollar, Euro dollar, Pound dollar. We're looking at dollar yen, dollar franc, and dollar CAD. So I'll select those instruments that I'm interested in as being potential candidates for trading this news before the news. And this means that I expect basically a flat market leading up to the news announcement 90 minutes before. Okay, so 90 minutes before, what do I expect to happen? Well, I expect that the Aussie dollar will stay within about a 25 pip range. I expect the Euro dollar will be within about a 35 pip range, the Pound dollar 40 pip range, the dollar CAD 30, the dollar franc 40, and the dollar yen 30. So basically, to go over that again for you, we got dollar CAD, dollar yen, 30 pips. We have Pound dollar, dollar franc, 40 pips. And we have Aussie dollar, 25 pips. So what do I mean by that? I mean the high to low pre-statement, okay, pre-minutes that come out should be on Aussie dollar 25 pips. So high to low. And so I'm going to hop on and look and see if I can find anything 90 minutes before the announcement comes out that is, close to that range. And I tried not to force it. Forcing it usually doesn't work out that well. And but if you can go in there and just, really look for those potential news trades, then you may find some good opportunities. And definitely, I 100% recommend that you demo trade this, especially the first few times, in order to take advantage of the trade, because you're going to get. You are going to force some trades to begin with the first time around, probably. It also lets you see how the market moves when these announcements come out. And if you do this for about 90 days, you will have went through every news trade possibility, and you'll have made a lot of mistakes whenever before you actually go live. And so that'll save you a lot of money. So it's the actual minutes, and what will happen is they'll come out and why did they make the rate decision they made, and you'll find out all about the details of that, the record of the meeting. You'll see all the insights, the financial conditions, the outlook, and then of course, there'll be statements on quantitative easing and tapering, but that'll come out at 2. So while people are waiting on that to come out, usually there's not a lot of people taking positions in either direction. And this really actually impacts even Monday and Tuesday. And you'll notice that the later half day of the day usually on Monday, and then throughout Tuesday, you'll see just the market not be as volatile as normal. It'll be a little bit more choppy while we're waiting on minutes to come out or even rate statements to come out. So it's not the rate statement on 2 o'clock, but it is the minutes. And we'll see the same conditions happen, because right now the minutes in some ways are even more important than just obviously the interest rate itself, because nobody expects the interest rate to change. The press conference, when that does come out with the interest rate, which is not tomorrow, it's a different announcement, but that one obviously has a huge impact. But people want to go back and, all the economists and all the high-frequency traders and everything else, they're all going to be reading through and scanning through lines and seeing what verbiage has changed. And, has one word been taken out? Has a few words been added in? And the reality is you're not going to keep up with it fast enough, so you need to have a way to take advantage of it without trying to just buy. Because if you buy after it flies up, it's going to turn right back around on you and all this other stuff. So the first thing I do is I go in and I do range bound, meaning I think it's going to stay in that range before the announcement. The second thing that I do is I do what's called a straddle or a strangle on the news when it does come out. And usually we'll get some pretty big moves. Now, the minutes can spike, and then it'll go a little bit slow for a while, and then it'll usually keep going in whatever direction it's looking at. So if they're looking at not putting in tapering soon, they're looking at not doing QE, continuing QE, then that's going to continue to weaken the dollar. Like euro dollar will rise. If they start talking about implementing tapering, then that's going to strengthen the dollar, and that would, of course, cause something like USD to fall and continue to fall. So, you can keep up with that. There's a good news feed website I use called financialjuice.com. It's really simple, but you can go into it, and you'll see basically the quick parsings of all the posts and blog posts and everything else that have come out on any given news announcement. And it'll allow you to have a little better understanding of what's in those minutes without you having to try to read it and spend 30 minutes, and by the time you've read it, the thing's over. Okay? So, again, what we do is we go in and we'll look for, ones that, have a wide enough range. And if we can find them, then we'll put the trades on. Now, sometimes what I have to do is I have to leg in. Okay? So sometimes, again, I have to leg into the trade to be able to find one that's going to work for me just because there's nothing else there. If I go right in. So if I find, a decent one that's, say 20 pips above, I'm looking for a 40 pip range, then I might get into a 20 pip above one, but I wait for it to maybe oscillate a little bit down before I get into the one that's 20 pips below to be able to actually pull this off and get these trades on. And every once in a while, there's a lot of implied volatility, and you can get some really easy trades. Sometimes it's a little bit more difficult. So, anyways, again, that's 90 minutes before. But what about 60 minutes? What about 60 minutes before? Well, obviously the numbers are going to change, and the ranges are going to go down a little bit. So your euro dollar, dollar CAD, and dollar franc all have a 20 pip wide range, high to low, 30 minutes before. And we'll talk about the 60 minutes here in a second. But again, 30 minutes before euro, dollar, dollar CAD, dollar franc, 20 pips. The smallest ones, and this is often honestly when I find the best trades, is right at 30 minutes before. Aussie dollar and dollar yen, 15 pips. Biggest mover, 30 minutes before is the pound dollar. So 30 minutes is usually the best one because you can get that tighter range, which makes it a little easier to find some binary contracts. And then 60 minutes before is sort of the in-between range. And every once in a while you will be able to find one that'll work out. That'll be usually within a few ticks of the range. And just to give you those stats, so we got, 25 pips on dollar CAD, dollar yen. We have 35 pips on pound dollar, dollar franc. And we have 20 pips on Aussie dollar and 35 pips on pound dollar. So, anyways, that gives you the basic stats. You can, of course, replay the show to write down all those numbers. But that's the ranges that we're looking at for each one of the binary butterflies into the news report.
Says you can't take it with you. TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome back here to the Diagnostic Trading Hour. And we're just looking at some of the different things that you can trade tomorrow, trading at Nadex. And like I said, there's the 90-minute, 60-minute, 30-minute pre-news butterflies that you can take advantage of, and usually it's pretty flat, especially right now leading up to the minutes because everything is so volatile, wondering what's going to happen with taper and with QE, and then of course you got Yellen and all that stuff, and of course as soon as she appeared on the stage, things just started flying. So showing that she was on board with tying everything to unemployment, making everything take as long as possible, delaying taper as long as possible, and keeping the QE machine primed and pumped and ready to go. Okay, so we had the butterflies out of the way. The butterfly is just when you go in and you buy a binary below the market, you sell a binary above the market, and as long as it stays in between that range, then you are profitable. Okay? However, if it does hit one of the strikes, you do want to get out. Usually want to get out of both sides of the trade whenever you do that, because you'll take some profit on one side, you'll take a loss on the other side, but it'll help equalize your risk reward. And often I'm looking for about $30 whenever I do the trade. So per contract. Now you can do 1, you can do 10, you can do 100, but looking for $30 per butterfly that I'm doing, and usually it's about a $15 on one side, $15 on the other side, trade whenever I'm doing it. Okay, well, that covers that. And that's really the biggest and the best way to play it because, again, it's the policy statement. Now, you can go in and you can straddle or strangle it as well. That is an option. It's not as big of an announcement as the interest rate in the press conference, but the market is bound to be, ready to, fly around. I've got a caller right now. We got Mike from Florida about, I'm guessing the deviation levels there. Is that right, Mike?
Yes.
Hey, man, how's it going?
All right. How are you?
Hey, I'm doing great.
I haven't had a chance to listen to you today. I've been doing some other things, but I was kind of worried about a stock that I have, DDD. It started dropping. I put some puts in at $65 on the December 26 puts, and I don't know. What do you think?
All right, let's pull it up. Let's check it out. All right?
All right.
So let's see here. Now, you got what, December expiration? What expiration did you get there? Is it December 26? Yeah, okay. All right. So, doing a pullback right now. Mm-hmm. And you bought some 26-put. Now, did you buy, obviously you're just going directional?
Sorry?
You said you bought the $26 puts, right?
Yes, I did, yeah.
Okay, so this is good, right?
That's what I'm
you're just trying to figure out when to take the thing off. Now,
well, not only that, but whether or not, I don't know if you're familiar with the stock, the 3D printers.
Right?
And,
yeah, they're really, they got all sorts of stuff going on.
Yeah, I got all kinds of faith in these things, and I'd hate to get out of them, but if the market's going south, maybe it is time to get out of them.
Okay, so you got, maybe I'm a little bit confused, because I thought you said you just bought the $26 puts.
I did, but I also own the stock.
Okay. Oh, okay, so you're just doing that to have a little bit of extra hedge, is all you're doing.
Exactly, yeah.
Okay, yeah, because it's not going to give you, obviously, that big of a hedge, considering it's, so far out of the money there.
Right.
So, you're not really doing a dynamic hedging. Whenever I do dynamic hedging on a stock, the bad thing is you give about half the profit, but you actually can make a lot more money because you accumulate a lot of stock along the way. But I'll go in and I'll buy a put, and then I'll sell a call above that to help finance that. And then as it moves up, a deviation, using maybe like a standard deviation, say you're using Thinkorswim, as it moves up a deviation, then what I'll do is I'll go in and I'll roll up my puts and calls. Okay. So that gives it some of my profit, but after you've rolled it up a few times, like let's say you started at 60, after you've rolled it up a few times, then now you've locked in your profit. And so if it does fall back down, then you're able to, obviously be fully hedged and protected on that on the way.
I understand what you mean, yeah. Okay, gotcha. Yeah, it was a 65, but yeah. And what do you think about the that industry itself, 3D printers?
I think that it's just beginning to grow. So, I think it's going to be huge. There's so many applications. There's the medical stuff that they're doing with it. There's just a lot of things out there right now.
And also, I think DDD may be the best company to be with because they make the supplies for it as well.
So they got the whole kit and caboodle there going on.
Yeah. So.
Well, based on where it's already moved right now, I could see it easily getting down to about 70, based on the volume spike. But then past that, if it goes past that, I'd be looking to exit pretty quick.
I got you. Okay, so, thank you, sir. Appreciate it.
You bet.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, let's check everything out here. Looking at everything. And one of the things I wanted to go into and look at right now, Yellen, she came out a little bit ago, and she made a little press conference statement that got released right around, let's see here, we pull that back up. Came out at, about 48 minutes ago, and caused a quick spike over the dollar CAD. And, I mean, it went literally as soon as she made this little announcement, you just see this massive surge right there in the market. Market ran up, and what happened on that trade was, or not the trade, but just the market itself, she stated that the rates will stay low even after some of the economic triggers are hit. So, in other words, unemployment rate could fall down, and she's going to just leave the rates on down there. And so, of course, that caused a very fast surge in the market, and it continued to climb into that. But then, and this is the important part, okay? Then there was a volume spike that you could have taken advantage of that happened again after that. And so you have to be willing and ready to go on those. And right there we had a volume spike right there. You can see it. I look over at notice I'm looking at the dollar CAD futures, the CAD dollar futures. They look sort of inverted, but I mean they are inverted because they're CAD dollar versus dollar CAD. But looking on over here, you can see right there at 106, we got a big volume spike, a perfect volume spike right there. And so you can go and you can look at the 2 o'clock, 3 o'clock expirations, etc. And then the market is, retreated right after that. So basically, news came out. You had the fundamental shock remember, when news like that comes out, when big spikes like that come out, usually that happens due to there being a fundamental shock, a surprise news announcement. Okay? So when that surprise news announcement comes out, it usually takes about 15 to 20 minutes for that fundamental shock and awe to wear off. And the big key to that you're looking for is going to be when you see a volume spike happen after that news announcement. I'm not talking about right after, but say like 10, 15 minutes before, or 10 or 15 minutes after, maybe 20 minutes after, you see another volume spike take place. That's your big key. Okay, that's your, hey, this is probably now the fundamental shock and awe should be over. Profits are being taken right now because the saying, heads on down on her statement right there. And you see the initial volume spike that happens right here. Market's moving on down right off of the news. Takes about 15 or 20 minutes. And then you get another volume spike. So all the traders who are dumping, going short, instantly started closing out and taking profits. And then you see all of a sudden the dollar CAD reversing, right there in price. Okay? So if you use those volume spikes and every once in a while, especially when you see the market just jump, okay, that is a time to look for a volume spike probably like 15, 20 minutes afterwards. And now you can spend some time and you can figure out what happened and what caused it and everything else. And especially if you can just pull up a quick thing like on a financial juice or whatever and see, oh, that's what caused that announcement just now, that spike just now. Now, sit back for a minute, give it 15, 20 minutes, and look and see if there's a volume spike that way you can go in and expect for a reversal off of that massive quick move. Anytime there's a big move, usually you're going to look for a reversal off of that big quick move, okay? And the volume spike is your key. In other words, when that volume just goes through the roof, and the volume on both sides of the volume spike is half or less of the initial volume. So I'll maximize the screen to even show this a little bit better. Obviously, you can see this was the big spike bar right there. But let's look at the volume spike bar itself. And I'll just flip this thing on its head so we sort of are in the same direction. C/C. And then I'll be able to do times. I think -1 should work in TOS. There we go. So I'm just trying to get upside down for a second so you can sort of, be in the same directional mindset of the dollar CAD going, up and then down. And so right here, look at this additional volume spike that took place. This thing is, we got volume right here of, 176 contracts, 189 contracts, 627 contracts. We're talking about 3 or 4 times the amount of volume. It drops down, and then as soon as it breaks this bar's low, because we have a confirmation now, because this bar is closed. As soon as this bar closes and we know that both bars on each side of the volume spike are less than half, then we have that entry to go short. Okay, so you could short the FX. You could, if you're doing the futures, we'd go long because it's inverted. But you also could short the binaries. You could short the spreads. And anyway, it's just a good way to check out that kind of trade. But that's a good clue for you as a good time to look for them is when you just see what just happened. Instead of maybe spend a minute to try to figure it out. But after that, just go, here in the next, I'd say 30 minutes or less, but, really 15, 20 minutes, just be watching and waiting for that volume spike to pop up. And, you might even, when that happens, when it's news-based, you may even want to go down to the 1-minute charts to find it. Because if you wait on the 5 minutes, it may take too long. Okay? So, and this one, it might have worked. You wouldn't have been able to get in until 3:15. Let's see, let's look at the 1 minute. What time would have been able to get in? 1:08. So you actually able to get in 7 minutes sooner. So if it's a massive surge off of news, about 15 or 20 minutes later, you get a volume spike. Drop that puppy down. Drop your charts down to a minute chart. And that's about the only time I'd recommend doing that, to look for that. And it'll give you basically let you get a little faster. So instead of getting in at, somewhere around 95.35, you'd be looking at, over here, we'd be looking at more of, about 95, 38, 37, but it'd be a lot later. And so as that time is taken on, so the price is about the same, but the time is significantly different. And it doesn't sound significant, but, minutes count in binaries, and that can affect, obviously, any kind of premium that sits there. Anyway, it's just a lesson, not so much a Monday morning quarterback type thing as it is hopefully a lesson that you can use, that when you see surges or you see news that happens, you see these massive bars, if you can see that they're related in any way to a news announcement, then maybe there's a potential trade coming up, and that'll let you, have something to focus on for the next 15 or 20 minutes to see if you see a spike pop out. All right. So, let's get back on track. I want to talk about some of the other news trades that are going to be coming out tomorrow as well. Like I said, we're going to have a few of them. So let's talk about the one that's going to come out at 10 o'clock tomorrow. Okay? So at 10 o'clock, we have the existing home sales. Usually this is not a massive market mover, as well as a few other things, but on existing home sales, and let me pull up some of the stats on that, and we'll look at it all and get all the pieces together. And also core retail sales and CPI, we'll talk about that as well. So there's a whole lot of, going on. And then we also have the UK MPC meeting minutes coming out. But let's look at the existing home sales first, because that's also sort of same on topic as the FOMC minutes are coming out, in the sense that we can do butterfly binaries into them. Well, existing home sales comes out at 10 a.m., okay? So since it comes out at 10 a.m., then we can look at hopping in these trades as early as 90 minutes before, 60 minutes before, 30 minutes before. And again, 30 minutes before might be your best bet, but just because there are a couple other news announcements, though usually they don't move that much. I'll talk about those stats here. But let's look at this. 30 minutes before the news, we got 15 pips on Aussie dollar and dollar yen. So 30 minutes before the 10 a.m. existing home sells. And then we have 20 pips on euro dollar, dollar CAD, and dollar franc, 30 minutes before. We have 25 pips on pound dollar. Starting to see, pound dollar usually is the most volatile. Hopefully you're starting to recognize that pattern. Looking on over at 60 minutes before, we got 20 pips on Aussie dollar, and we got 25 pips on dollar yen. We got 30 pips range high to low, 60 minutes before existing home sales, about 30 pips on the euro dollar, dollar CAD, and dollar franc. And then we also have 35 pips on the pound dollar. So there's a lot of ways to use this, by the way. What's cool about this is if you understand this, not only can you do butterflies, but if you really want to start getting really active, you could go in and you could trade directionally. The thing moves up about 30 pips. Well, that's the average high to low, okay? So if you have a 30 pip from the low to the high, maybe it dropped down 15, moved up 30, you may just decide to go short on a spread. You might decide to do a short binary. There's a lot of things that you can do. Now, you can use this also for legging in. So if it goes down, you put it in one, it goes up. You put it in the other, you get better premium. There's a lot of ways that you can use this knowledge as you get better at it. Start off with just doing the binary butterflies, but then, you can take it to a whole different level. Even as just an FX or futures trader, you can use these ranges for just doing some, basically like 90 minutes of, swing trading. Looking on over at the 90 minutes before, on the Aussie dollar, we have 25 pips. On the dollar yen, we have 30 pips. On the euro dollar, dollar CAD, and dollar franc, we have 40. And then on the pound dollar, we have 45 pips. So that's basically how to play the existing home sales. It's really not worth straddling or strangling. Now, we also have the core CPI that's going to be coming out. And so we want to be able to go in and take the best advantage of that one. So let me look at this real quick, and I'll pull up the details for you. There we go. Got that updated. So core CPI, and it's a pretty decent trade. Let me pull up there's one in particular that we're really going to want to focus on, and that's going to be the euro dollar. The euro dollar, 79% of the time, breaks 50 pips, and its average range is 61. So I want you to think about this when combining these two things together, because we're talking about the existing home sales at 10 a.m., we're talking about the core CPI at 8:30. Well, if core CPI is coming out, that's going to cause some volatility between 8:30 and 10, right? So I want to look at these two things, and I'm going to go, okay, well, which ones do I want to avoid? So I probably would want to avoid a euro-dollar butterfly because I'm expecting it to move because the two reports are coming together. They're merging. I'd also avoid the pound dollar. It's obviously the biggest mover. So it doesn't move as often off core CPI, but it usually has more of an average range. And I might want to focus on the less volatile pairs, like the Aussie dollar, the dollar yen, are going to be more my favorite to look at for doing these butterflies, simply because I'm aware that like dollar CAD, Aussie dollar, dollar yen have a lower probability of moving that much on the CPI, and they have a very low range before existing home sells. So dollar franc, dollar yen, Aussie dollar, dollar CAD, Aussie dollar, dollar yen are going to be my three favorite pairs for the butterfly, simply because I'm taking into account that at 8:30 there is a news report coming out. Now, those last 30 minutes, it's sort of fair game because the news has come out, the fundamental shock is over, and I mean, if I can find any one of them that match, then fine. But I don't want to hop in at 8:30 for a 10 a.m. on the euro dollar when the core CPI comes out, thinking that I'm going to be able to pull out a butterfly 90 minutes before the news of existing home sales can be out at 10, because I'm almost doing like two completely opposite trades. So I'd actually rather straddle the euro dollar for at the 9 or 10 a.m. and then maybe go in and do a butterfly on the dollar yen, dollar CAD, Aussie dollar at the same time. And that can be called a straddle butterfly, or if you use binaries to do a strangle, it can be called a strangled butterfly. And sort of a cool way to combine the two different trades together. And if it moves really fast, usually the straddle or strangle will cover the risk of the butterfly. If it doesn't move at all, the butterfly will cover the risk of the straddle or strangle. And if, let's say, you go and you do a euro dollar, it explodes, but the Aussie dollar doesn't move much, then you can actually make money on both. So it's just a cool way to combine both when you're doing these types of trades on existing home sales and core CPI. Okay, so we also have the UK MPC meeting minutes coming out. Again, that's going to come out earlier in the morning, 4 to 6 a.m., and scheduled at 4:30. So on that, let's look at, let's see here. And by minutes, I mean, the facility rate votes and, all that fun stuff. It's not the exact same thing, but basically you have it's interesting how you actually get the minutes show the votes. So they call it votes, but it's really the minutes because it's showing who voted what, why, and everything else. So let's talk about the stats. How does that one work out? Because that's probably one of the best ones to do tomorrow out of the entire group. And so I want to give you the exact stats on that one. And this is one you can even put on before you go to bed, okay? You can literally put this on at like 11 or 12 o'clock tonight for 7 a.m. expiration and set your take profits. And that's really how I'll play this. So what I'm going to be looking at is the pound dollar, because obviously it's the pound. And I'm looking for a move. The average move is about 80 pips 2 hours after. Okay? It'll spike like 40 pips. It may hesitate and pause a little bit, maybe pull back a little bit, and go up to 80 pips. And so there's a lot of room in there. 92% of the time, it breaks 50. So I could actually risk as high as $45 on this trade, looking at a 7 a.m. expiration, getting it around 11 or 12 o'clock. Or you could, if you are an early morning riser, you want to get up in the morning, whatever, then, of course, you can put the trade on around 4 o'clock in the morning as well. So, but this is probably one of the best trades we have for the week is the pound dollar move. And so, anyways, try it out, test it out, demo it out, have fun with it, and use the scanner to help make this easy. If you're going to use a scanner for, say, the straddles, then just hop over here and go to spread scanner, and then just type in like $100 on max risk and 1-to-1, and then choose pound dollar, and then just scroll down and find, say the 7 a.m. at that point of two of them that match. I'll talk a little bit more about how to put a straddle on when we get back from this break.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. All right, so let's go ahead and look at the scanner, and let me pull that up for you so that way you can see the scanner here, and we're going to show how to put together a straddle. And, just to do a recap, we're looking over at, the different markets we can trade and the different pieces we can put together. But the main thing we want to look at is how to apply a straddle trade. And so, as a reminder, log in, check out the spread scanner there, put $100 max risk, put a risk-reward ratio of 1. Choose your instrument and scroll down. Once you scroll down, now you want to find, let's say if you're putting this thing on an 11, ideally choose the 7 o'clock expiration as long as it's not too much more expensive. If it's really expensive, if it's above $45 combined, then you'll have an issue there, and you may have to either pass up the trade or get up early in the morning around 3 or 4 o'clock to look at a 5 o'clock or 6 o'clock expiration. But assuming that the 7 a.m. will work out well for you, it has worked out quite a bit. You can also do strangles on these, by the way. Just looking for a 1-to-1 within that 80 pip range, so it would be pretty easy to find. It should be pretty easy to find around 11 o'clock. But if you go in and we're doing a straddle, then you can go in and find ones that have a matching floor and ceiling. So let's just assume these are the ones we're looking at. We're going to find ones that have matching floors and ceilings. Right there, 6120, and then here we see a ceiling. The higher number is the ceiling, 6120. Okay, and then look at the combined risk. Like the combined risk on this one right now is $11. And of course, there's not a lot of volatility expected left in the market between now and 3 o'clock. But, got an hour left on there. But right now there's $11 of risk in the trade. That obviously would meet the $45 maximum risk requirement total because we're adding the $8 plus the $3 to get 11. And I'm adding the exchange fees as well. So when you see that 90 cents, that's the 90 cents exchange fee. And if you don't know what the fees are on Nadex, the exchange fees are 90 cents a contract, up to $9 an order. So if you did 100 contracts in one order, it'd only be $9. If you did 50, it'd only be $9. If you did 10, it'd be $9. If you did 5, it'd be $4.50. If you obviously do 1, it's 90 cents. Okay, so they cap out, which is cool. The bigger your order is, the smaller your fees are. And so I'm going to hear 61.20 to 62.70, and then 59.70 to 61.20. That gives us like 150 pips possible movement. So obviously, if this were the 7 a.m., that would give us plenty of room to capture that profit of an expected range of about $80. And, we don't have to go for the whole 80. We just go for the 1-to-1. So, in this trade, if you were putting on and you had a $30 risk, then you just need to make, and here's the formula. It's really simple, okay? The combined risk of both. So let's say if this was the actual trade. So 9, 10, 11, $12 is the combined risk of both plus the risk on the other side. So if on the one I bought it at, let's say, 61.23, the combined risk is $12 plus the risk on the other side is 8. So I need to set my take profit 20 pips higher than where I bought it. Again, the combined risk on both plus the risk on the other side. Because remember, if it flies up, I don't expect it to fly back. If it does, then that'll be great. But if it flies up, then I can take profit at a point where if I want 1-to-1, I need to cover the assumed loss on the other side. I need to assume that the market flies up, that the sell is going to lose, that it's not going to retrace back. And I need to make back all the money I put into it initially in order to get a 1-to-1. So if I put in, $11 on the trade, or $12 on the trade, I need to net $12. Well, if I'm going to lose $8 on the short side, and I only make $12 on the long side, then I'm only going to net 4. So if I want to make 12, plus I want to cover the 8 lost on the short side, I need to make 20. So my take profit would be 20 pips higher. On the flip side, $12 plus the 3. So I only need to make 15 pips. And so on the sell side, I put my take profit 15 pips lower. All right. Well, hopefully y'all can start taking advantage of some of these news trades. Check them out. And I'm going to Vegas, so I will see you next Monday right here on the Diagnostic Trading Hour. Stay tuned. We have a lot of great shows coming up for you.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.